BigBear.ai, the AI company that wants to predict the future, but is still figuring out how to predict its own stock price. They report Q2 earnings this Monday after the bell, and Wall Street's basically holding its breath, which, let's be honest, is easy when you're underwater on your shares. So here's the scene. Last quarter, BigBear.ai brought in $34.8 million in revenue, up 5% year over year, but still missed analyst expectations. It's like showing up to a potluck with some store-bought cookies. Technically food, but no one's impressed. They also had a $7 million adjusted EBITDA loss, thanks to higher R&D spending and SG&A expenses. The translation, they're burning money to build stuff which could pay off or be the corporate version of buying a Peloton in 2020. The one bright spot, their backlog grew 30% to $385 million. Basically, they've got a line of customers forming. They just need to actually serve the food. Now, the defense play, the big storyline here is Big Bear's growth influence in the U.S. defense sector. They snagged a prime contract with the Department of Defense Joint Staff J35 for their Orion decision support platform, which sounds like something Tony Stark would use to decide which suit to wear. The mission critical AI, not make your Instagram ad better AI. We're talking real national security. Don't screw this up AI. If they execute well, this could lock in long-term high-margin government revenue and give them some serious credibility. And on the border, travel, and TSA glow-ups, they've also deployed AI at major airports: Dallas, Fort Worth, Denver, LAX, and Seattle, which is great because if AI can serve LAX, it can survive anywhere. The pitch here is faster, smarter, more secure travel, the kind of thing government agencies will happily throw money at if it means fewer security lines that look like Coachella. Now we have also shipbuilding and industrial AI. They're also cozying up to Austal USA in the shipbuilding sector, using Conductor OS and Shipyard AI to modernize manufacturing. Think supply chain visibility, operational agility, and hopefully ships that don't take 5 years to build. Also, the international footprint. They're partnering with Smith Detection to combine AI threat detection with scanning hardware for global distribution. This could open foreign markets, and yes, that means getting paid in currencies other than US dollars, which in this economy is like having multiple streaming subscriptions. Diversification. We also are seeing tech maturation here. Products like Veriscan, TrueFace, and Pangiam threat detection are moving from R&D to ready to sell. The more of these they can monetize, the closer they get to breaking even. Right now, they're basically a tech startup with a defense badge. And then we also have some margin and money talks. Gross margins are improving thanks to high margin AI products scaling up, but SG&A costs are still high. Because, sales teams don't work for free. EBITDA is still negative, but those losses might narrow this quarter if they can turn backlog into billable revenue. The stock setup, shares popped 8% on Friday on optimism ahead of earnings, and maybe because investors are hoping for an AI Cinderella story. But with high valuation multiples, negative profit margins, and speculative trading patterns, this is still a volatile name. So what to watch on Monday exactly? Revenue consensus is $40.99 million, which is up 3% year over year. EPS, a loss of 7 cents, worse than last year's loss of 4 cents. Backlog conversion into revenue, margin improvement for AI deployments, new defense or government contract wins as well. So is BigBear.ai buy, sell, or hold? Well, if you're a believer in defense sector AI and can stomach volatility, maybe it's a hold with upside. If you prefer steady profits, you might want to wait until they can predict something more consistent like a positive quarter. That's all I got for you today on this one. Thank you for sticking around. This is Trades and Gains. My name is Max Pitts. Have a good day.